Hershey stock is up almost 10% year to date in 2025. And when you include dividends and you include the risk adjustment given its lower risk profile, it's delivered risk adjusted superior performance compared to the S&P 500. Investors want to know if it's not too late to buy Hershey stock. What do I think about the company right now after the year has progressed, after cocoa prices are increasing? What do I think about the company? Well, I'll answer those questions here in this video, so let's jump right into it. So as I highlighted, Hershey shares are up 9.92% year to date in 2025, and even recently, Goldman Sachs double upgraded this company's share price to a buy, and the company has benefited as a result of those increases, those upgrades from investment banks. Now, looking back longer term, Hershey's company has generated relatively decent revenue growth. This isn't a company where you can expect double-digit revenue growth. You'll be lucky if it generates mid-single-digit revenue growth, as it has in the previous decade. It's grown revenue at a compounded annual rate of 4.6%. I wouldn't expect that for the next decade. There were circumstances in the previous decade that benefited Hershey, including the lockdowns during the pandemic when people were spending more time at home, consuming more snacks at home. That was a positive for the company. Additionally, the soaring inflation rates worldwide and the stimulus provided by governments enhanced the company's pricing power, allowing it to increase prices and generate revenue growth in that way as well. I don't expect those benefits to persist over the next decade, although inflation has remained persistently elevated. I don't expect that to continue in the back half of the decade as consumer spending, as government stimulus will start to decrease. Governments are increasingly indebted and the deficits worldwide are increasing. And so I don't expect stimulus to continue, and that won't be a tailwind for Hershey over the next decade. Now, the margins are contracting for Hershey in recent years. It peaked at around 25.8% in return on invested capital and around 23% in the operating cash flow to sales. Those have since declined, but are still solid. The company's return on invested capital at 18.1% is well above its weighted average cost of capital, which is a rule of thumb I like to consider, and its OCF to sales is still solid at 19%, even though the trend is downward. Click the link below to watch the full video.